1. Hi everybody, welcome back to the 10th of an hour with Griffin Bridgers. For today's episode 103, we're going to look at gifts of interests in a single-member LLC and how those might be treated for tax purposes. Now going into this, you might be intuitively thinking, oh, that's an easy answer, it's a disregarded entity. But the answer isn't quite that easy, especially when you start to split hairs and look at some of the past cases and rulings that have come down in this area. Now, as always, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. Now, generally, if you have a single-member LLC, there are check-the-box regulations that a lot of practitioners are aware of, which by default treat a single-member LLC as a disregarded entity. However, a single-member LLC could also elect to be treated as an association for tax purposes. That's outside of the scope of today's discussion, but what that means is that if that election is made, the LLC would be by default a C corporation, and the single member could then also make an S corporation election if that single member is a qualifying S corporation shareholder. But putting that aside, when we dive into the disregarded entity regulations, we see that what that means is that the entity is ignored for quote-unquote federal tax purposes. Now, this is broad, and it would seem to include all taxes, including income and gift tax, but the regulations also go on further down to clarify that what this language is intended to state is that the tax liabilities of the entity itself are disregarded. Now, it doesn't refer to the single member's entity or taxes being disregarded, and that can create a little bit of a conundrum when it comes to the gift tax, because the gift tax isn't applied to the disregarded entity. The gift tax is applied to the single member who owns the disregarded entity. So we have a situation here kind of like a grantor trust, where the single member would be treated as the owner of the LLC assets for income tax purposes and would be taxed on the income of the LLC, but recall that under a grantor trust, that relates solely to income tax and solely to the tax status of the trust itself. So if the grantor transfers assets to the grantor trust, those are gifts for gift tax purposes, because the grantor trust status really looks solely at the trust and not at the grantor themselves. Now, what about transfers of a single-member LLC interest? Would that be the same analysis? In other words, would we look at this as a gift of the LLC as a going concern, or would we look at it as a gift of the underlying LLC assets? Now, it seems intuitive, if you're looking at the LLC as a disregarded entity, that this would be a gift of the underlying LLC assets, but this is where that issue comes into play. One, that only the tax liabilities of the LLC are disregarded and not the tax liabilities of the single member. So, in the gift tax context, the IRS and the tax court trend has been towards respecting the LLC interest as a property interest for gift tax purposes. So in other words, when the IRS goes to apply the gift tax, they don't necessarily look at how the tax law treats property rights. They look instead at how state law defines property rights, and in that context, state law respects an LLC interest as a separate property interest and not as an interest in the underlying LLC assets. Now, there's a number of unsettled issues that could come up when you look at this treatment, and by no means is this list designed to be all-inclusive, but if you're doing any planning and looking at any gifts that fall into one of these categories, these are some yellow lights that you should put up to make sure that things are going to be respected as intended. One, for example, if you want to make a qualified personal residence trust, you have to transfer an interest in a residence. But what if the residence is owned by a single-member LLC that the grantor is transferring to the QPERT? Well, in that case, that LLC interest may not be treated as an interest in a residence, so there would not be a qualifying transfer to the QPERT in that sort of a situation potentially. Another situation could be in valuation. If you have an LLC that has a single member and it's a business entity, its value as a going concern might be much greater than the book value or net asset value of its underlying assets as a disregarded entity. So which value applies in the gift tax context? Most likely it would be the valuation as a going concern, especially because the IRS wants the value to be as high as possible for gift tax purposes. Another issue could arise with the gift tax annual exclusion of $15,000 per donee per year. Now, when you look at the gift tax annual exclusion, it only applies to gifts of present interests. Now, this has been really kind of dissected in the partnership arena, but it can also apply in the single member LLC arena, where if you make a gift of that single member LLC interest and distributions of, say, the income and earnings of that LLC are restricted, then the IRS might treat that LLC interest as a future interest and thus would not give the donor the gift tax annual exclusion. And then finally, the big question here is, could a transfer maybe by a family member to a single member LLC be treated as a gift to the single member? Could we reverse this and have that same kind of treatment? Most likely it wouldn't, and keep in mind with any sort of transfer, you'd first look to whether it's a valid sale or exchange. So if it's an equity transfer or debt where money is being loaned, that could stand up. But if that debt is forgiven, could it be a gift to the single member by the lender? Or would it be respected as a loan, or if forgiven, a capital contribution to the LLC or discharge of indebtedness? And how would that apply? And that kind of brings us to the income tax issues as well, where if you have that equity treatment, any sort of gift that involves anything but the entire LLC interest now forms a partnership for income tax purposes. So the minute you add a second member to the LLC, you now have two members, and it can no longer be a disregarded entity. And partnership formation can be a taxable event. If the LLC asset mix is at least 80% cash and securities, there could be deemed gain on the formation because the exchange of the assets for an LLC interest would not be a non-recognition transaction under Code Section 721, because you'd have, quote unquote, an investment partnership in that sort of situation. Another issue is that the step-up in basis is an income tax concept, so it seems like it would apply directly to the LLC assets, but really what we've seen in the past is that the IRS has looked at the basis in the disregarded LLC interest, because remember, the disregarding is with respect to the LLC itself and not with respect to the interest in the hands of the single member. So if the basis in that LLC interest is increased, there's no real 754 election that you can use to shift basis to the LLC assets. That would be intuitive that you could, but there's really no guidance on how do you get there. Now, I suppose you could easily just add a member and then kind of do it as a backdoor type of thing there, but that's another unsettled issue. And then finally, one thing that has been settled but was unclear in the past is a situation where you have a single member that's a charity, and in Notice 2012-52, the IRS determined that a transfer to that LLC would be treated as a transfer to a branch of the charity for tax purposes, so you would still get the income and gift tax deductions for charitable contributions. But as you can see, there's a number of unsettled gift and income tax issues here that surround single member LLCs. And it all goes back to our central theme here that the disregarding is only for the tax liabilities of the LLC itself and not the tax liabilities of the single member of that LLC. As always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. But thank you for listening to this episode of The 10th of an Hour, and I look forward to seeing you in the next one.